All right, let's see what charts we're watching with Tony Sycamore. He's joining us from IG. Tony, well, we alluded to it. It's a big week when it comes to U.S. tech earnings.
A massive week. It doesn't get any bigger. We've got Microsoft, Meta, and Apple, and we have the Nasdaq now trading towards the lower bound of a trend channel, which is held really since last October. And the important level to keep in mind when we are watching for these tech earnings more at an index level is the 18,500 to 18,400 area. And you can see on that weekly chart there, we've now had 3 down weeks for the Nasdaq, which has been a result of rotation out of tech stocks, positioning, risk unwind, etc. But if it can hold above 18,500 to 18,400, I think we can probably set up for a better August. Now, at this point of time, there's no signs of capitulation in place. I'd love to see some capitulation there because it would increase confidence that we've got a tradable low in place around this 18,700 level, which it touched late last week. But you can see what I'm looking at. That uptrend is very significant, and it has been 3 down weeks now for the Nasdaq, something we haven't seen in quite a while now. And I suspect now we're going to probably start to find some support, and providing it holds that support, I think we can start to see the uptrend shortly resume.
Okie dokie. So looking forward to that. And, you know, that will translate to what happens here locally. I know we're resource bank heavy, but, you know, when we see good sessions on Wall Street, generally follows here. So where are we at technically for the S&P ASX 200?
What the ASX 200 is, it's consolidating those recent gains, but you can see there on the weekly chart. Now, I always like to start with the weekly charts at the beginning of a new week to see where we stand with regards to these longer-term support and resistance levels. You can see the ASX 200 has been in a trend channel for quite some time, and it pushed above there up to that 80-83 high, couldn't hold it, and it closed back below there. The second of the week we saw last week, again, it hasn't been able to get back up to that 80-83 area, and we really need to see it do so. And I would be looking now for the ASX 200. It cannot break below last week's low, which was around 78.60. If it breaks below 78.60, it starts to look like we've rejected the top of this trend channel resistance. But it's going to depend on those tech earnings, which you've mentioned, on what happens on Wall Street. And, of course, locally here we have the all-important Q2 CPI data. Now, I'm nervous ahead of this because there is so much riding on it in terms of what it means for the RBA. I just don't think they can afford to look past the print of, if we got a 1 point, I think the market's looking for 1%. Well, the market is looking for 1%. But if we got a print fractionally higher than that, 1.1, 1.2, it's going to be difficult for the RBA to look through that. And that would also be detrimental to the ASX 200's upside prospects. So a lot riding on the very data-rich calendar which we've got this week, both in the US and here in Australia.
So if we did see inflation beat, and at the same time we've got global central banks such as potentially the FOMC, Bank of England cutting, what would happen to the Aussie?
Yeah, well, the Aussie is in a very interesting, a perfect storm last week for the Aussie. You had that 67.98 2 weeks ago, and it's a good reminder why we call the Aussie dollar the Aussie battler. It took 5 weeks to get up there, and in a week and a half, it's unwound all of those gains. But like the Aussie battler always tries or does do, it inevitably gets itself up off the canvas. And in terms of potential catalysts, well, again, that Q2 CPI, if it comes in hotter than expected, then those rate differentials, which are a driver of foreign exchange markets, would become more supportive for the Aussie dollar. So potentially we could start to see it retrace some of those losses. But more importantly, what is driving the Aussie dollar is this risk unwind, which we saw over the past fortnight, particularly in those tech stocks, particularly in regards to anything to do with China. And that's weighed so heavily on the Aussie dollar through things like commodities, etc. So there's a number of different cross currents. You don't often see a perfect storm like we did over the past fortnight in the Aussie, but geez, it was an absolute perler, and the Aussie dollar now probably starts to work off those oversold readings ahead of the CPI data we have here in Australia, and then everything starts to ride on that. If we can get potentially a stronger CPI print, if we can get these tech earnings not underwhelming like Tesla did, then potentially you could start to see the Aussie rebound. But at this point in time, it hasn't. Again, we don't see any signs of capitulation to the downside. So we have to be mindful that potentially we still have a little bit further to go there.
Okay, so oil, so geopolitically sensitive. However, it's not been as volatile as it has been historically as of late. So what are we watching?
Yeah, we're starting to look through some of these geopolitical inflammations, I guess is probably the best word, in the Middle East. But you can see there the range is starting to really compress there. You've got the trend line resistance coming from that 130 high, and then you've got some nice trend line support and the 200-day moving average, which crude oil is now edging towards. So it's like a spring which is being compressed. At some point of time, it's going to pop. The question is, which way does it pop? You've got very tepid data coming out of China as opposed to good data coming out of the US. So again, you've got some tension coming into the market through the macros, through the demand and supply functionality there. But for me, the risks are that we start to see crude oil push down towards that $74 area, which is the trend line support. And if it was to break below there, then you probably need to be a little bit mindful that we could start to see a test of those high 60s. But one thing is for sure, a move is coming in crude oil. It might not be this week, but it's not far away.
All right, we'll be watching out for that. How about Bitcoin? What's happening there? I know that it's trending on X or Twitter or whatever we call it. I don't know why.
Well, good reasons. We had former President Donald Trump come out over the weekend, and he's a pro-crypto, as we know, changed his tune a little bit since I guess, over the last 4 or 5 years. But he's now embraced crypto, and he's talking about building the national stockpile, and he's talking about turning the US into the crypto capital of the world. So very positive signs there for Bitcoin in terms of what former President Trump will do if he is elected. And I still need to see Bitcoin get above that trend channel resistance. It has been in a range really since that March high. You can see there that 73,794 high has been trading within a bullish trend channel for mine. But to really confirm that the correction, this trend channel is complete, we've got to get above those levels in the low 70s, 71,000 to 74,000. If we can get above there, then the uptrend has resumed and we can start to look towards 80,000. But overall, some very positive, I guess, rhetoric coming out of former President Donald Trump, which has got Bitcoin back up to these levels where it is currently.